Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out what companies are really saying, not just what they want you to hear. Today we're diving into a report from Opus Genetics, and things might get a little blurry, like trying to read an eye chart from across the room. This is a Form 8K, which is basically a company's way of shouting, hey, something important happened, to the Securities and Exchange Commission, or SEC. In this case, it's Opus Genetics, telling us about some preliminary financial results. This report came out on March 20, 2025, and it's giving us a sneak peek at how they think they did in the previous year, 2024. It's important to remember these are preliminary numbers. Think of it like a rough draft that might change when they finalize everything. This part of the report is where Opus gives us some key financial highlights. It's like the company opening its books and showing us how much money came in, how much went out, and what's left in the bank. First up, they are expecting a net loss of about 56.8 million its future, which we will see in a bit. The problem if it goes on for too long. This indicates a company struggling with expenses or perhaps investing heavily in its future, which we will see in a bit. Next, they tell us about cash used in operating activities. To break that down, this means they burned $25.6 million to keep the lights on, pay employees, and do the everyday stuff to run the company. This is a better metric. A net loss is an accounting term that can be manipulated, but cash burn is really hard to fake. Finally, the company had about $3 million in cash and cash equivalents at the end of the year. This is their safety net. That's how much money they have to pay expenses. Remember that last bullet point about burning $25.6 million of cash per year. Well, it means they only have about 1 year before running out of cash. Opus Genetics is basically telling us, hey, these numbers are not set in stone yet. Don't make any major decisions based on them. The final numbers could be different, maybe better, maybe worse. This is them covering their bases and also telling investors that they shouldn't make financial decisions based on this report alone. This is the end of the report, a pointer to where you can find the official financial data in the filing. Nothing to see here, so let's move on. Now let's take a step back and look at what this all means. Opus Genetics is a company working on gene therapies for eye diseases. This is a very expensive field. Developing new drugs takes a lot of time, money, and has no guarantee of success. These companies often lose money for years before hopefully making it back with a successful product. So the $56.8 million loss and the $25.6 million cash burn aren't necessarily a sign of failure. It could just be the cost of doing business in this high-stakes industry. The real question is whether they are making progress on their therapies and whether they have enough cash to keep going until they do. However, the fact that they only have about a year's worth of cash on hand is definitely something to watch. They will likely need to raise more money soon, either by borrowing it, selling more stock, or partnering with another company. Each of those options has its own pros and cons. Borrowing adds debt, selling stock dilutes existing shareholders, and partnering means giving up some control. My take is that Opus Genetics is in a tough spot. They are in a risky business, burning through cash, and will soon need to convince investors to give them more money. The next year will be very important for them. They need to show real progress on their therapies, or they risk running out of money and failing. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more corporate deep dives. And let me know in the comments what company you want me to decode next.